Economists are expecting 185,000 non-farm payrolls added to the economy in the last month, with the unemployment rate holding steady at 3.9%. The number's out at 8:30 a.m. Eastern. Getting ahead of it now, joining me with more is Making Money with Charles Payne, host and the author of Unbreakable Investor. Charles Payne here now. Charles, good morning to you.
Good morning.
And I want to get your take on your expectations. And you say, basically, aside from the FOMC meeting and the CPI, there is not another kind of data that could move the market as much as jobs data. And you're expecting a pretty big move today. You think there's going to be an outsized reaction to these numbers?
Absolutely, absolutely. And I'll tell you why. On one hand, you've had a lot of other job-related data coming down. ADP, came down a lot. Initial jobless claims going up, and within some of these ISM numbers, the numbers have been going down, particularly on the services side, manufacturing side rather. But and then, of course, there's the rumors, the scuttlebutt. Hey, you know what? The Fed's back in play. There's a soft landing. So you've got that anxiety built up. The other side of this, of course, is if this number comes into to a point where, let's just say, it's considered too strong. Whatever that number might be, I'd say 190 or more, then Fed's off the table. That's it. All of these folks who are hoping, praying, thinking that maybe the Fed's going to come in, you've got three firms that are still looking for a July rate cut. I think all of that, all of a sudden, is off the table, and then the market really has to trade strictly on fundamentals. And here's the tough part for the argument from the majority of Wall Street. The consensus is the economy is slowing, and at the same time, earnings are going to get better. I don't understand how that happens. Now, you can tell me that the comparisons are easier, right? It's because we had such strong earnings a year ago. So year-over-year comparisons might be easier, and they may look, okay, they were up 10% from a quarter ago, but they're not going to be strong if the economy's not strong. So Wall Street's got itself in a bind. I'm looking for a huge move in reaction to these numbers.
Yeah, look, I'm looking at a Piper Sandler note right now, okay? And Peter Nasso is telling clients, get this, Nancy Lazar and the team's machine learning model suggests that the May payrolls rose 218,000. Okay, I know that we have an estimate of 185, Charles. Piper Sandler is talking about a number of 218,000, stronger than the consensus, boosted by the birth-death adjustment and hiring in the non-cyclical health and education sectors. That's government funded, we know that. So there's that. And then I'm reading Tom Lee from Fundstrat, and he says it's been a good move to buy and add risk on the day that the jobs report is released. He says, whatever this number is, we remain constructive on stocks in June. We would be buyers of the stock market on a soft jobs report, even if the first day rally is strong. So the expectations here in terms of what happens to the markets are all over the place post this number.
Yeah, and again, what Tom Lee is saying is what I said. If you get a number that brings the Fed back into play, forget about it. Katie Bardador will have an authentic breakout. New highs beget new highs. Chasing will be big. You got $6 trillion in money markets. A lot of money will start to flood in. You got folks who own bonds who only hold them for the first time. They only plan to camp out there. So you're talking literally trillions of dollars coming into the market. You had a major firm 2 days ago noted that the first 2 weeks of July historically are the best 2 weeks for the stock market. Historically, going back about 100 years. And that money that pours in the beginning of the summer will keep pouring in and keep pouring in. And so this will be a market that, forget about the fundamentals, the Fed will be on your side. You have more buyers and sellers. And that's what a lot of people are hoping for, that we take off like a rocket today.
Well, look, that's the bottom line. What you just said, $6 trillion in cash sitting in money market accounts right now. And this has really been the wall of money that investors are climbing up. Yep. But look, don't forget, you got a Fed meeting next week and you got the CPI next week, okay? So you've got the Fed kicking off a two-day meeting next week, Tuesday and Wednesday. The central bank widely expected to leave rates unchanged, but we're all focused on what Jay Powell is going to say. What is going to be the language change? The futures market pricing in a nearly 70% chance of a September rate cut, Charles. Nearly 81% chance for a November rate cut. So what about that? And don't forget that CPI number is probably among the most important reports that we're going to be looking at in the coming weeks. On Wednesday, the CPI. It's been heavy macro data this week, but anything changes. It'll change on a dime regarding that CPI Wednesday, Charles. So give us your expectations.
Well, to your point, the CPI has moved the market a lot more than even the jobs report has, right? CPI and FOMC, those are the top two job movers. This is what Wall Street wants to hear, Maria. The bulls on Wall Street, they want to hear this, that policy is sufficiently restrictive. That's what they want to hear. If Jay Powell says that, because that's been a debate even within the Federal Reserve. You've had folks like Logan saying, we're not sure, maybe it's not. A lot of doubting within the Federal Reserve. If Jay Powell comes out and says that their policy is sufficiently restrictive, again, it's going to be an avalanche of buying. It will not stop. It will be a summer rally of summer rallies.
Wow, you're really looking for some big moves.
I'm just saying that we're set up for this. And now, listen, conversely, if the number, let's say today the jobs number is considered to be too strong, right? Not the Tom Lee side, but the
like
Nancy Lazar, right? Like the Nancy Lazar side. Well, then that puts the Fed off. That sends this market down a little bit here, and that puts us under a serious amount of pressure. But the bottom line, the bias is to the upside, right? Because we have been making new highs. People do want to buy this market. Folks do want to chase. And so if you're betting, you bet more on the upside than the downside, knowing that the reaction will be much stronger to the upside. Even if it's a number that takes us lower, your downside risk may be 1%, your upside risk may be 2% in a summer rally.
Well, I'll tell you right now, it's going to be very hard to keep Nvidia down, okay? Now we're talking about this anticipated 10-for-1 stock split. Happens after the close tonight. Look at this stock this morning. It's $1,206 a share. You're talking about a 10-for-1 stock split right here after the close tonight. What does that mean for this stock and for AI companies, Charles, after the close tonight?
I'm going to say something, Maria. I would not be surprised if we initially dip on Nvidia, because what's happened right now is we know that stock splits move markets. We know that they move these stocks, and the data is out there. And so what's happened is everyone's gotten in front of the data. It reminds me a few years ago, maybe 10, 20 years ago, when everyone started talking about the January effect, and it started happening in December, and it started happening in November, and it started happening in October. Everyone wanted to get in front of it, and so maybe, just maybe, all of the split buying has already occurred.
Okay, maybe, but let's not forget about the fundamental issues here, because you've got the Federal Trade Commission and the Justice Department about to open antitrust investigations into Microsoft, OpenAI, and Nvidia. Okay, these regulators want to know, they want to examine the company's influence on the AI industry overall. Now, we know that, Nvidia is the name because it produces the most advanced semiconductor chips. But what is this investigation going to going to expose here? And what about an investigation into Microsoft? We're talking about the two most highly valued companies in the world. Yeah. Microsoft, followed by Nvidia, hitting $3 trillion the other day.
Listen, I don't know what the hell they're looking for, Maria, but I get so afraid. Our stock market is dominating the world. I mean, we're the greatest share of the global stock market, and there's a reason for it. The innovation, the ideas, the freedom. This is crazy. And let the market take care of this. In the last 5 years, there's been $290 billion invested in AI just through venture capitalists. Wow. There's going to be competition for these guys. Listen, you got to give them credit. Nvidia was smart. They went out on the mission, and Intel didn't. Cisco didn't. Apple didn't. So what? They were brilliant. We want companies to be brilliant. We want competition. We don't want the government intervening. And don't forget also what we heard last week from China. They're investing $47 billion into AI. Let's not kneecap our companies.
Yeah, that's a great point. But don't forget that largely these chips are made in Taiwan. And if China goes into Taiwan and China's in charge of the Taiwanese chip production, the world is in trouble. Real quick, Charles, on this meme stock situation, Keith Gill, better known as Roaring Kitty, set to live stream on YouTube for the first time in over 3 years. Meme stocks up this morning in anticipation. Do we care about this, Charles? What's the story? All
right, I'm going to explain this the way I've tried to explain it to a lot of folks on Wall Street, because these are not dumb people. This is not dumb money, and this has nothing to do with fundamentals. In the last couple of years, Maria, we have seen people burn down cities in revolt. And in the last few months, we have seen people take over college campuses and intimidate folks of a different religion. This is a protest. This is a revolution that I say is akin to the American Revolution. They see a system that is upset. And then what? Folks are protesting with their own money. I say, God bless them. Do what you want with your own money. And if you think they're dumb, fine. But guess what? A lot of people are making a whole lot of money right now.
They sure are. All right, let's slip in a short break. Charles, stay right there.